So this first question is a basic accounting. So based on the recently past year question that 2020. So what happened is that based on the topic that I group into the different group that, give me a minute, because join one by one, I need to make sure they're all in this. Okay. So based on the recently the copy that I have, you see this is all the 2020 topic that the question came up. Not all the topic that I will cover, so whatever past year question appear for the topic, then I will just discuss in the class, for this class. So we go to the first question. Okay, the basic accounting. Okay, look into this question that Amara maintained a petty cash book using Impress system. The Impress amount of 200 is restored on the first day of each month. On 1st January 2020, Amara has a balance of 65 in her petty cash. All payment of less than 100 are made from the petty cash. On 1st January 2020, Amara owed 85 to Rawan, a credit supplier. January 1st, the petty cash book Impress was restored from the business bank account. All these transactions, the question asks us to prepare the petty cash book. Before we do it, so we go through all the double entries first for this all the transaction, so that later when we do the petty cash book will be easier. And look into the header what they have. They have a travel, they have postage and stationery, then have the third column, ledger. So basically we need to take note these three columns to prepare. January 1st, petty cash Impress was restored from the business bank account. So your double entry is petty cash book and then bank. But how much to be restored? Because they say that the Impress amount is 200, and then beginning of the month on 1st January, they still have balance 65. So the amount to be restored will be 200 minus 65. Okay, so your double entry is debit petty cash book and credit the bank. On 3rd, purchase stationery for cash. So what are the column they have? They have postage and stationery travel. So we have to put into the postage and stationery account, which is this account is amount 624. And here, petty cash, because they say that less than 100 all go to the petty cash book. 7, pay traveling expenses 49. Travel, and then 49. Same thing, double entry, credit, petty cash. Next, 14. Pay Razwan the amount outstanding on his account. So his account outstanding is 85. So we have to write the person name, Razwan, 85. And credit petty cash. Next, on 19. Purchase goods on credit from Razwan, 200 less 10% trade discount. So purchase goods on credit. But when you purchase goods on credit, your double entry is purchases. And then, because it's a Razwan, you have to credit Razwan, not petty cash, because they didn't pay anything. But they say got 10% discount. So your net purchase actually is 200 times 90%. So it's 180. So this entry nothing to do with the petty cash book. On 22nd, pay taxi fare. So your this taxi fare is related to the travel. So we go to put into the travel account. 18. Okay, next, 28. Return goods to Razwan which has been purchased on 19, list price 40. So your double entry will be debit Razwan, but how much we got to return? 40 times, okay, 40 times the 90%, because when you buy, you get discount. So when you return, also you have to add the discount rates. So this one, put purchases return. 29. Pay postage. So your account will be debit postage and stationery, which is 11. And then credit petty cash book. So all the entry we already done. So the next thing, but in the exam, you don't do this all because you got no enough time. If you want to do, you do at the side here. Just put the simple debit credit. Okay. So this account, we open the T account, petty cash book. This one is the total receipt. And then the date, the detail. Okay. And then total payment. They have total pay. They have the travel, postage, okay, next, ledger account, ledger account. Okay. So the date beginning of the month is, what is the year? Okay, 2020, and then this is a January 1st. Balance down. This balance brought down from the question, they say 65, so 65. Okay, and then according to the question in here, we have done all the entries. So basically we can take the entry in here. So in this case, I'll put it here so that easier for me to do. Okay. Here the first, they say transfer this amount, transfer to this from the bank, which is restore 135 to get the 200. The next on third, this is on third, postage, debit, postage, credit, petty cash. So all the credit, this credit basically is the payment side. So this one on third, what we pay for this postage and stationery, we have to see what is the detail right here. They write stationery. So we write stationery. And the amount is 24. And go to stationery and postage account, put 24. The next 7, travel, debit, and credit. But what we write in there in 7, traveling expenses. So we have to write 7, traveling expenses. But the account, we go to the travel account, 49. Okay. Next is that on 14, pay Razwan the amount outstanding. So we write last one. So 14, last one, 85. This amount is under the ledger account. On 19, this one you don't go and put into the petty cash because there's none of it saying petty cash. In here, the 22nd, we have 22nd, but what we pay for the travel, 22nd, taxi fare. So we put taxi fare. Taxi fare. So the amount is 18. Okay, is that 18? Let me double check. Okay, 18. So we go to travel account. Okay, next is 28. Last one, purchases return, and last one, nothing to do petty cash, don't take it. 29. So we change it to 29. 29 pay postage. So we write postage. Postage. So under the column postage 11. So last part they say what? Prepare Umbra petty cash book for the month on the page balance and draw. Okay. So now what we got to draw is we balance it out first. Let's get the subtotal out. Okay, so this is N already, but we still have 31st, which is balance carry down. So this amount balance carry down because this total is 200. Okay, and here must follow this one because petty cash must be in the debit side balance. So take your this minus your this amount. So this is your balance carry down. Any question or anything that not sure or anything that you think is not right, you just talk, you just put into the chat. So I will look into your chat, then I will reply you. February 1st, balance brought down. Okay, so this entry put into it because they just want us to put this according to this one. They say they just want to balance on the 1st February. So this 1st February, the balance worked out. Very important because this one will give you 1 mark. So don't stop in here. Must complete the double entry balance, carry down, balance worked down. So far, okay. Now we move on to the next. This one I will send to you all in case you all later on want to refer back. Prepare the account of Umbra as it would appear in the ledger of round 1. Balance the account and bring to, okay, from the round 1 point of view. Round 1 is a seller, okay, and then Umbra is buyer. But when they come to the B, they are asking from round 1 point of view to look into Umbra. But in this A, they want Amara petty cash book. But in B, they want round 1 book. So be careful when you prepare it. So this one, when they say round 1 book, that means Umbra is a trade receivable. So you know trade receivable, that means this is your current asset. So when you prepare the double entry, you need to take note. So we prepare the double entry for the Amara. Which one is related on it? Look into the question. They say that here on 1st January 2020, Amara owed 85 to Rawan. So this 85, from Rawan point of view, is an asset. So 85 is in here, balance brought down. 2020, January 1st, balance brought down. 85. Okay. So the rest of the transaction, which one is related from the ledger, from the double entry that we made just now? Where we see the Rawan? Here. Here got one Rawan, and then what else the Rawan? Got any more Rawan? Purchases also from Rawan, and then this one also from Rawan. So we prepare this one first. Let me. Okay, 85 in here. This one on 14, we make payment. So here, put 14. Okay. So this amount, we assume that Rawan is taking from the petty cash. So we put, because from Rawan point of view, Rawan received, whereas Amara is paying out. So Amara is paying out the amount 85. Okay, and then this entry from Rawan point of view, this is the sales. So on 19, record sales. Don't compute purchases because this is stemmed from Rawan book. So the Rawan is 180 for the sales. From Rawan point of view, this is the sales, not the purchases. Next is that on 28, from Rawan point of view, this is a purchase, is a sales return. Is 36. So now we can calculate debit and credit total. Okay, here 31st balance carry down because this is the current asset. Current asset balance carry down is in the credit side. So take this minus these two. So we get balance carry down here, and then February 1st balance brought down this amount. So this is for the Amara account under the Rawan book. Okay, so far, any questions, just let me know. Okay, next we move on. Okay, the next one we want to find. Okay, so this account consider sector. Now, on 2nd February 2020, Amara paid the balance due to Rawan. She deduct cash discount 2%. Required, complete the following table by placing a tick in the correct column to show how Rawan should record the cash discount. So from the seller point of view, Rawan is a seller. Rawan is seller. So to the seller, the discount, the cash discount given is a discount allowed. It's a discount allowed. Okay? So discount allowed is a expenses. So expenses is in the debit side. Okay, so this is what general guideline that need to take notes. Now come to here, complete, and then to show how Rawan should record the cash discount where an account has no entry, tick no entry. Amara, so the double entry for this one, to record this discount, as I said, this discount allowed is the expenses. Expenses discount also always in the debit side. So your double entry is debit, discount, allowed, and credit, Amara. This stands from the Rawan book. Rawan book. Okay. So come to here, we will know that what we got to do is we have to debit discount allowed. Okay, this one debit discount allowed. This entry, debit discount allowed. For Amara will be credit. And this is only the entry. So that means this discount receipt is no entry. So no entry, discount received. So clear? Next. Amara usually pay Rawan by check or cash. Stick to other method which Amara could use to pay from her bank. Okay, nowadays, what are the bank transaction? Is many now. Most of the people nowadays, they didn't use check anymore. What they use online transfer. Especially nowadays, everybody's scared to touch the money. Okay, so online transfer one of it. Another way, if you are adult, normally you have credit card. Use a credit card. Now also in the market, we call debit card. Debit card slightly different with the credit card. Debit card means that you must have money. Must have money in the bank. Okay, if you want to use it. But credit card is no need. Credit card is use the money from bank, pay after 1 month. Normally because once a month only the statement come. So you pay once a month. So there is difference between credit card and the debit card. So this online transfer, because this is from Amara point of view. So in this case, normally this one we call credit transfer. Credit transfer means that give to the Rawan. So far, okay. If you are in overseas, we have the so-called telegraph. Okay, telegraph transfer. This is one of, if this is an overseas, this is only applied to overseas account. But because this one they didn't mention, this one unlikely, this one lah. This is unlikely happen. Most probably, this Amara will do the credit transfer, or use a credit card, or use a debit card to pay. And nowadays also got what e-wallet. In nowadays people use a lot of cash and go e-wallet. E-wallet. This is also one of the way people pay money nowadays. So what you need to think about this one, basically you just think about what is the market have now. Okay, so your answer can be a lot for this question. Now we move on. Any question before we move on to the next question? No response. I assume you're okay. Okay, now on 20, this paper is 22 May, June 2020. Okay, question number 1, and what they asked to do. They asked to prepare the purchaser's journal, and then cash book, and what else? This is accounting principle. Okay, so what I will prefer to do is we go through all the double entry first, put debit, credit, then after that only look into what they want us to do. Okay, date, detail, debit, credit. Okay, on 4th, bought goods on credit from Millie, list price 320, subject to a trade discount of 20%. So your double entry for this one is debit purchases, credit. But how much we got to record? We have to take 320 times 80%, because 20% trade discount, we won't do any accounting recording. Only purchaser's journal later on we will use it. But because this is a double entry concept, I put the net amount only. Okay, next on 5th, bought goods on credit from EHL Limited. Bought goods means that purchases. Okay. Okay, and then here EHL Limited. So 500. Okay, next is that on 6, bought stationery 145, paying by check. So this one, debit stationery and credit bank, because it's by check. So 145. And 8, cash sales 280 will pay immediately into Bila bank account. So your double entry will be, because it's go to the bank, so bank debit, even though it's a cash sales, but it's a bank account. And then credit sales. So this one 280. Next on 10, pay 120 cash to 120, pay to Millie and pay cash. So Millie 280, 110, 128. Next is on 12, cash sales. So debit cash, credit sales. 110. Next 13, bought goods on credit from Toad, who offer 4% cash discount for payment made within 14 days. Don't take anything, just take this amount, okay? Bought goods on credit. So bought goods on credit is debit purchases and credit Toad. But the amount that you take note is 250. Don't go and deduct, because this is a cash discount, not the trade discount. If trade discount, in here is a trade discount, so you have to deduct. But in here is a cash discount. Don't go and deduct first. Okay, next 17. Bought office equipment 500, paid by bank transfer. This office equipment Okay, equipment paid by bank transferring bank account 500. Okay, 21st, pay by check for the goods purchased from toll on 13 after deducting cash discount. So how much we pay? This one 21. Then we have to look into this transaction. Okay, this 13. How much we got to pay? The amount. So we have to pay toll, still the same amount. This, okay, but we get the cash discount. So your bank account, you pay, and then you have discount. This, okay. This bank amount is have to minus because it's from 13 to 21st. How many days? 21st minus 13. Okay, only 8 days. So 8 days means it's entitled the 4% discount. So we have to take this times 96%, the bank amount, because this is 4%. Whereas this discount received is 4%. So total, this one. Next, 24th. Pay 485 to EHL Limited by telephone transfer, having deduct 3% cash discount. So this one is paid to EHL Limited. Okay, having deduction 3% discount, how much we buy from EDHL here? 450. So this one 500 that you pay, and then you pay with the bank, and then you get the, this is the purchases. So same thing, discount received. So double check, 3% times 3%. Okay, so this amount minus this amount, you get the check payment. Okay, next, 28. So all office equipment for cash. So debit cash, credit office equipment. So your cash is 50. So this one is 50. So now we settle all this one. Now follow the question. They ask us to prepare purchases journal and indicate the ledger account to which the total will be posted. Purchases journal. Date here. Which one that we have to take? Okay. Look at all the purchases with the name. For example, purchases with the name. Because purchases journal is only record purchases on credit. Okay. So the transaction, like example, this one, debit purchases, credit, this one, and then this one also the same. And then any more purchases here on 13. This, okay. And then what else? Is there any more purchases? No more, only 3. So only these 3. We got to, okay, I need to show the, okay. On the date of January 1st, January 4th, I have from the Millie. Okay, first of all, we need to check whether Millie got any. Okay, we have the trade discount, list price. So we have to do a little bit list price. do some working to show it. Trade discount, and the trade discount is 20%. Here is 320, 20%. Take this minus this. So this is the net amount, it same to your this one. And then on 5th, we buy from EHL Limited. This one, they didn't talk about anything, straight away put into here. Whereas 13, we have purchased 13. Okay, this one, they didn't say trade discount. This is a cash discount. Don't go and take this one. Straight away, put to, and then put the amount 250. And then they said in this question, they did mention, okay, let me give it a minute. Okay. In this question, they say that total the journal and indicate the ledger account to which the total will be posted. Even though they didn't put in this statement, remember, have to put transfer to purchases account. Okay, so this amount consider done. So this is for this question. For this question A. Okay. Now next is Cashbook. Okay. So let me copy the Cashbook first. Cash. Date. Date here. Log. And then cash. Okay, date. Okay. Discount. Receipt. Put into here so that easier for me to do. Okay, I put into here so easier for me to do. Okay. Can look into the first transaction they have with what they have. April 1st, balance brought down 160, 1960. 2020, April 1st, balance brought down. And then amount that they have. 160 and then 1960, 1960. Okay, this transaction, no cash, no bank, nothing. So go to the 6. So on 6, we have the stationery. And this is under the bank. Okay, and then in 8, you have the sales. So 8 in here, debit bank, sales under the bank, Okay, next, on 10, pay Millie. On 10, pay Millie, which is using the cash. Okay, next is on 12. This is the sales. And under the cash column, 110. This one, nothing to do with it. 17 is the office equipment. Office equipment is how much now? 500. So 500. Okay, next is okay, this one 21st. Pay Toddy. Okay, 21st. Okay. Pay this fella. But this one we got to record two parts. One is a bank amount. Bank amount is 240. Discount $10 should be in here. 24th, we have to pay EH Limited. So 24th, pay EH Limited. And this amount is from the bank. And then get 15 discount received. Last, so the office equipment get the cash. So we have to put into here. Your cash account is, your detail is office equipment. And in the cash column, 50. Okay, basically this all for this transaction taken. Now what we got to do, we have to see which one is more, which one is less. So what we got to do is calculate the sum total first. Okay, subtotal. See which one is more, which one is less. Okay, so take note, discount allowed, discount received. No need to carry, no need to put balance carry down. Just leave it like this, 160 and 25. How come? I made mistake. Sorry, this one is wrong side. This one should be this one. Okay, because discount cannot be like this. Cannot be have balance right now. Okay, now our balance in the debit for cash is 320, but in credit is 128. So we have to put 30th balance carry down. Take this total amount minus this amount. So this is your balance carry down for the cash. But for the bank also debit more than the credit. So in this case, your this amount minus this. So this one should be your balance carry down. So once this one settle, okay, give me a minute. Following month, May 1st, always complete balance carry down, balance what down. So this amount will be transferred to here. So our account considered done already. So any question, just put into the chat so at least I can follow, I can respond to you. So far, okay, for the cash book. Can I move on. Okay, now I go to the next part. Okay, NIM accounting principle apply to Billy in each of the following situation. The double entry for the posting of the purchaser's journal entry is completed by posting the individual amount to the purchaser's ledger. So this is the double duality. Okay, duality concept. Okay, next is that the purchase of goods on 5th April did not include goods cost 55 which bought from his own use. The moment you saw the word own use is a drawing. Drawing is using the business entity. This is when you see the word own use. Okay, or sometimes they say drawing. So this is using the business entity concept. Next is the stationery purchase on 6 April has been recycled. This is expected to improve the reputation of the business. Reputation is not recorded in accounting. This is money measurement. Because all the accounting recording must have monetary term in order for the recording. Okay. Next is that the value of office equipment shown in the financial statement was based on its purchase price. So this purchase price indicate is original price. So this is under historical cost. Okay. So historical cost saying that we record the original price. Purchase price is means original. Okay, so far okay. Okay, now we move on to the paper 20 October, November. Any question, just ask. Okay, the next one, we need to do paper October, November, paper 22. Okay, what they ask for? This one. They asked to do the book of prime entry, Petra account. Okay, here they mix a bit with the limited company. So whoever in this group haven't learned the limited company, you all just take it first, okay? Okay, Div owned a business selling furniture. The following transaction took place during August 2020. August 9, sold goods on credit to Petra 675. 14, Petra returned damaged good to Deva 120. Okay, and then after that is bank cash sales. Petra settle her outstanding balance. Okay, get the credit transfer. Okay. Now, this is one part. Complete the table to name each business that transaction give accounting record. Okay. So this is stem from Dave. And Dave is a seller. Okay. Seller is related to the sales. Okay. Related to the sales. So now the first entry, number 1. Okay. Okay. Transaction. Business document. Okay, and then double check this one. just in case make any mistake. Okay, yeah, correct. Okay, business document 1. Okay. Number 1 transaction. So goods on credit to Petra. So this one, the document we use is a sales invoice. Okay, and we under the div book, this is a sale. So we record in the sales journal. Transaction number 2. Petra returned damaged good to Dave. This is from the Dave point of view. He had to do the recording. And what are the documents used? Credit notes. And this one under the sales return journal. Because this stands from the seller point of view. Next is on third, bank cash sales. The moment you saw bank or cash, this is all under cash book. Okay, this is under cash book. So document that you can take is that receipt. This is cash sales. Cash sales you can use cash sales cash sales bill. Some of the company they use cash sales bill, or some of the company what they can do is bank the cash sales, they use the tier rule. Depending on the industry they have. If they are doing the so-called hypermarket or supermarket business, you normally will use tier rule. Okay, but if you are using like normal industry use cash, they will issue cash bill. Number 4, Petra settled her outstanding balance at 1st August by credit transfer after taking a cash discount. So your document, because you receive, okay, you receive money, they mean div receive money using, it also will get this one. But this one, because it's a credit transfer, the word credit transfer, where you get it from? From your bank statement. Your bank statement will tell you the credit transfer amount. So this is all the document possible for it to happen. Okay, now we move on to the next. Prepare the account of Petra of August as it will appear in the debit ledger. Okay, we prepare the Petra account. Okay, here, dollar sign. Okay, see what are the things that we have. Okay, on 1st August 2020, the balance on credit customer Petra sales ledger account is 940. So this one is 940. Okay, the date is 2020 and the date is August 1st. Balance right down. So this is the amount you have, and then okay, on this first, so goods on credit, this one on 9, sales, and the amount is 675. And then on 14, return 2020, August 14, August 14, sales return. Okay, 120. And then on 23rd, bank cash sales. This one, Bank cashiers nothing to do with Petra. Don't go and put Petra. Okay. Next, Petra on what day? On 29. Petra settled her outstanding balance at first. They are talking about this one only. And they get, after taking a cash discount 5%, means that on this 29, you have one bank transaction. At the same time, you have discount allowed. Okay, the amount for it is that taking your this times 95%, whereas this times 5%. So settle. Now the balance carried out to calculate. August, the last day is 31st. Balance carried out must be in the credit side because this is a asset. So take total debit. Okay. And the differences. So your this balance carried out. Don't forget, always remember, complete your double entry. Balance brought down, which is in the debit side. So this is your T account for okay, clear for that? Okay, we move on to the next. So we try to target 2 topics so that to finish it today. So identify the section of the statement of financial position at 31st August, which will the balance of Petra account will appear. So when we talk about the statement of financial position, we just do some revision first. Statement of financial position. So we have how many sections? We have non-current, I do short form, non-current asset, current asset, capital, non-current liability, and current liability. So this Petra account, this amount, it will sit in the current asset because Petra is a trade receivable. Okay, then is owed. Petra owed. So this is the section current asset. Next is that Dave allowed his credit customer a cash discount 5% for prompt payment. He is thinking to reduce this to 2%. State one advantage and one disadvantage to Dave for this proposal. So when he reduced the cash discount from 5% to 2%, if we take the Petra amount, let's say currently Petra amount is owing how much? 5555, okay? Let's see. Okay, 5555. So this is the outstanding. You can use the number to test yourself. So if you get 5%, so your discount allowed will be from 5555 times 5%. Suppose is 555 times 5% is about $28. Okay, if you change it into the 5555 times 2%, so we get 5555 times 2%, $11. So discount allowed is the expenses. Discount allowed is the expenses. Now you notice that when we reduce it, our expenses amount, expenses reduce. Expenses reduce means that profit increase. is a good thing. Another thing is that when we talk about the bank account, if we change from the 5%, then if we give 5% discount, our bank only get 5555 minus 28. We get 555 minus 28. We get 527. 527. If we put 2%, okay, 5555 minus 11. 555 minus 11. 544. 544. Okay. Next is that you notice now with the change on it, our bank amount increase. So this is also a good thing because our liquidity position has improved if we change it. So talk about the advantage, we have these two already. So this is a advantage, but they only want one. We haven't talked about disadvantage. This one, advantage. Okay. Now disadvantage. You think people will happy? People won't happy. The customer won't happy. Customer won't be happy. So what they will do? They go to other supplier. There is a risk that he will face if he reduce it. That could be the problem. Okay, now Dave is considering turning his business into limited company. Okay, some haven't go through the limited company topic. Limited company basically is that the key thing about sole trader, because Dave is a sole trader. So the key thing different between sole trader versus the limited company is the limited liability. There is a key thing about the differences. They still have other differences, but this is a key thing of the limited differences for this both business. Limited liability. What is the mean by limited liability? Limited liability. Limited liability means that the debt of the business to the shareholder. Let's say example, to the shareholder, because company, okay, I talk about the sole trader first. Sole trader, they have unlimited liability. So means that the owner has to pay all the debt when the company winding up or close down. Okay, if not enough, the personal belonging had to use also. If not enough fund pay the debt, the personal belonging of the owner use pay debt. So this is the about the sole trader. Sole trader have unlimited liability. This is a disadvantage. But come to the limited company. company. So limited company is that the shareholder, we didn't call the owner, we call shareholder. The shareholder of the company only liable to the debt which the share that they invested. Okay. They only lost to the amount they invested. After that, nothing to do with them. That is called limited liability. Their personal belonging won't be taken. So far, okay? If the company closed down, now look into it. They say what? Wow, this 5 mark got a lot. Advise thee whether not or not you should form a bit like limited company. Justify your answer with 2 advantage and okay. So advantage is this one. The first, as I say, talk about limited liability or liability issue. So the advantages, number 1, limited, you can say, if has limited liability if we form limited company. Okay. Next is that what else the benefit? If in case the company normally limited company, they have more fund, they can get people to come and invest. So more capital can be invested by inviting the new investor or the share or the new investor or prospect shareholder. Okay, so this next is that normally limited company, they are more organized because they got more capital to hire, more organized due to have different department handle the task. So this could be but the key thing, try to talk about limited liability issue. Disadvantage, yes, disadvantages is that number 1, this limited liability, okay, is advantage. But other than that, when you form this limited company, don't forget you have a lot of costs. Higher statutory costs such as paying tax agent and for annual submission. So this one you must do every year. Okay, so once you get this type of professional people to do the job, then you have to pay more costs. So basically is that if you don't want to put higher statutory cost, you just put higher cost or more expensive. Okay, more expensive. Okay. Other than that, what else there as a disadvantage? When you are forming the limited company, you must minimum 2 person, so that you are not person that make the decision. So decision have to be decided. Decision made among the director will take longer time compared to sole trader business. So this one, what will happen to the problem? Could be delay the opportunity for new business. So this is just an idea for it. Okay, so far 3 questions for this topic. Any issue? So far for for March until November, this is a 3 questions related to this topic only. Basic accounting concept. Except this part, limited company is not fall into this. Which is some of you haven't learned, you'll just take it first. Okay. So any question? If not, I will move on to the next. Okay, if no, I move on. So I go to the next question. Yeah, let me close the file first. Give me a minute.